Hey, what's going on, everyone? Good afternoon. Happy Friday. Happy final trading day of 2023. We are going out with a bang. A little bit of selling here. I'm actually here for it. I like the selling. I want to buy some Microsoft. I want to buy some more Google. I want to buy some more Tesla. So I say bring them on down. But all right, y'all. I think we are good to go here. I've only got you for a half hour, so I'm going to make it a good half hour. And I know we tried doing this last week and we had some technical difficulties. So I'm glad we were able to reschedule and get it going today. But yeah, I wanted to talk a little bit about my goals for 2024 and a little bit of a different approach for me this year. I don't have so much a financial goal or a monetary goal. I think if you trade long enough, and I think the quicker you can hone in on this, the better. But once you've traded long enough, you start to get a good sense of not only do you get a good sense, you also build up a track record of what am I good at, right? What kind of names work for me? What kind of setups work for me? Better yet, what am I not good at? You learn your edges over time. For me, my whole focus this year, being 10 or so years into trading, I want to push my edges. And I think you can hone in on your edges by a focus on really three things. The stocks you trade, the setups you trade, the signals you trade, and then I want to tie it together with a suggestion. I think a good weekend project for all of you, develop a scoring system. Whether it be for a monthly chart, a weekly chart, a daily chart, build up a scoring system so you can look at a setup and give that a bullish grade, give that a bearish grade. In terms of playing process of elimination, which names in my watch list do I want to trade my go-to setups on? I think a scoring system can be really, really helpful. But the first component, and what I'm going to do this weekend is I'm going to print out all my trade results from this year. So Tuesday, I'll actually show you the real numbers. But when it comes to what stocks do I want to trade this year, if you look at my track record from this year, if you look at my track record from the previous year, the year before that, the year before that, I'm going on about 9 or 10 years straight where all the money that I make comes from a few names. Right? And year after year after year, it's the same handful of names. Might be a bit different for you. For me, it's the big boys. It's the big tech stocks, the FANG stocks, the Mag 7, Apple, AMD, Amazon, Google, Meta, Microsoft, Netflix, Nvidia, and Tesla. And then we'll throw in the SPX and the QQQ. But again, like every single year, I might trade 100 different names. At the end of the year, all the profit, all the cash I got to show for my hard work, it comes from these same names. So that's one thing I think each of you should do this weekend. Print out your results from this year. And I think on both Thinkorswim and Tastyworks, you can sort by stock. Now, which name did I make the most on? Which name did I lose the most on? And I think what a lot of you will find is the, call it the 80-20 rule or the 90-10 rule. Where out of all the names you trade, all the stocks you trade, 80% of your profits comes from 20% of them. And for me, that's the case like literally every single year. I might trade some energy stocks. I might trade a few financial stocks, a couple Goldman Sachs, Bank of America. I might trade the healthcare stocks, the retail stocks. It's the same exact pattern every year. All of the meaningful money came from these few names. So my first piece of advice, and don't look at just this most recent year. Try to go back as far as you can. If you've been trading for 10 years, print out your results for each of those 10 years. Sort your P&L by stock. You might see things differently. Year to year, it might be a little bit different. Some years you're making money on the healthcare stocks. Some years you're making money on the tech stocks. It might vary. As I'm trying to pursue pushing my edges, that kind of sticks out like a sore thumb. 80 to 90% of my profits come from these 10 to 20% of the names I focus on. So the first thing I'm doing this year is just really approaching things with a laser focus on these names. I don't really care too much day to day what energy's doing. And again, nothing wrong with energy. I've never made meaningful money on energy. I'm not getting too caught up in Johnson and Johnson. I'm not watching the John Deeres, the Caterpillars. So again, figure out which names you tend to make the most on, and then take consideration in making that that likely small list of names the bulk of your focus this year. So in essence, that's my universe, and I'll run my scans. I'll look elsewhere. But the point being, if I have one of my go-to setups in one of these names, that should be my only focus. Shouldn't go look into energy. Shouldn't really look at anything outside of these 8 or 10 names. So figure out the stocks you tend to make the most on. And then the second and third component here is just setups and signals. I think a lot of you will find you tend to make the most money on the same names year over year. If you break it down a bit more, in a bit more detail, I think for a lot of us, at least for me personally, a lot of times it's the same setup. I'm not doing random things in the same stocks every year, leading to nice profits. It's the same names, the same setup, and the same signal. Which, if you know me, you know that's already you already know that's the squeeze. 10 years running, that's my trade. Big 3 squeeze, big 3 buy signal, not in a retail stock, not in a name like Zoom, not in a name like Alibaba. It's that setup on a weekly or a daily chart in those 8 or 10 names. Every year, every month, it's like clockwork. All of my profits come from those few trades. I'm trading bigger squeezes on that small watch list. So that, I think, is the importance of doing your end of year review. You really can't figure out where you're excelling as far as stocks, where you're excelling as far as setups, unless you actually sit down and look at that paper trail, look at that track record. So now what I'm doing is I'm taking that watch list. I've accepted the fact that for 10 years in a row, I make all my money trading squeezes. Right, so I'm listening to the feedback that my own results are giving me. I shouldn't trade other setups. Right? I shouldn't try to reinvent the wheel every week. Keep trading squeezes in these same stocks. So 95, 98% of what I'm going to watch this year is right in front of you. That's it. I've got my 8 or 10 names. And then I got my squeezes. Right? I can watch the monthly chart. Okay, so Tesla's got a big monthly squeeze. I can sort by the weekly chart. Google's got a weekly squeeze. We got some 2-day squeezes. If the squeeze is my go-to setup, think of how much more I'm going to catch, right? How much more opportunity I'm going to get by just focusing on a handful of names. I don't have to catch the daily squeeze or the 15-minute squeeze or the hourly squeeze. I don't have to catch them everywhere. But if I narrow down my watch list to a couple of names, a few names, I feel like I'm going to catch more opportunity. I'm not going to see what energy is doing. I'm not going to see what GILD or Johnson & Johnson is doing. But guess what? If Tesla has a big 4-hour squeeze, I'm going to be all over it. So my hesitation to kind of take things to this point of focus has always been that FOMO. And what if I'm watching these 8 or 10 names and there's not a big daily squeeze, there's not a big weekly squeeze? Go look for a 30-minute or go look for a 15-minute or an hourly. Point being, I'm taking the setup that's always worked for me, and I'm not looking for that everywhere. I'm looking for that in just these names. So power of focus as far as the names I'm going to trade. Power of focus as far as what's the setup and what's the signal. And then my next suggestion is a scoring system. And I understand not each of you can make your own indicator. But the good news is I think you can do this with whatever tools you use. All right, so I got my columns here for the monthly, the weekly, the daily, the 4-hour, the 1 hour, and the 15. That's just cranking out the current score. So If we're looking at Google, for example, the weekly chart is a perfect, or an almost perfect 9 out of 10. The weekly chart's a perfect 10 out of 10. The daily chart gets a 9. The 4-hour gets a positive 6. What I'm doing is I'm taking things I care about as far as structure. Is the 8 EMA above the 21 EMA? Is the 21 EMA above the 50? I'm taking some momentum things. I'm taking different criteria and building out that scoring system. Now, here's where this is helpful. One of y'all can help me out here. Throw out a couple random names. And I'm going to throw on 2 of my picks. So I'll throw on Microsoft, and then I'll throw in Google. But throw a few names at me. All right, LMT, we can do that. LMT, I'm seeing some JP Morgan. We'll do some J&J. Yeah, we'll do some Palantir. That'll work. All right, so we got a few names here. PLTR, J&J. All right. Why can't I save it? Oh, there we go. We'll call this Happy New Year. So the game that I'm going to play all year long is pretty much process of elimination. I want to trade my squeeze setup, but what do I want to trade it in? Out of the names in my watch list, I want to trade it in the best from head to toe. Whether I'm trading a 30-minute squeeze, an hourly squeeze, a daily squeeze, I want to take those trades in the best stocks possible. And what I'm looking for is that multi-time frame alignment. The monthly chart, fully lined up. The weekly chart, fully lined up. The daily chart, etc. So that's where developing a scoring system, I think, helps with that process of elimination. So for sake of discussion, let's just pretend each of these names, so Google, Microsoft, LMT, JP Morgan, J&J, and Palantir. For the sake of discussion, let's pretend each of them has got the perfect daily squeeze. Like perfect squeeze, perfect momentum. We got buy signals. I've got 1, 2, 3, 4, 5, 6 names, and I really want to try to narrow that down to 1. Right, the whole thinking this year is less trades, more size. So here's where the scoring system is helpful. If they're all perfect on the daily chart, they're all perfect on the, they're all equal on the daily chart, I'm going to go through my scoring system from the top down. So I'm looking at monthly charts. Right off the bat, I'm going to eliminate Johnson & Johnson. Google's positive 9. Microsoft is positive 9. LMT is positive 7. JP Morgan's positive 9. Not enough data on Palantir, but point being, negative 3, the weakest of the bunch. So I'm going to get rid of that one. All right, now I'm left with 1, 2, 3, we got 5. And I'm going to keep on playing that process of elimination. So when I'm looking at weekly charts here, the lowest score would be LMT. Google gets 9, Microsoft gets 9, JP Morgan gets 9, LMT gets 4. All right, I got to get rid of LMT. All right, I want the best in show from the top of the mountain all the way down. All right, now I got Google, Microsoft, we're getting rid of LMT. So now we're down to 4. And I'm going to keep on doing that. What about the 4-hour charts? Palantir is the worst. All right, I'm getting rid of Palantir. What about the hourly charts? Google's the worst. So I'm going to get rid of Google. How about 15-minute? Microsoft is positive 6. JP Morgan's negative 2. Last man standing is Microsoft, based on that scoring system. So here's what you can do. I'll kind of give you like a few basics. As far as momentum, throw the default MACD on your charts. On most platforms, you should have the MACD. Throw the MACD on your chart. I'm a big fan of using that for your momentum. And then for structure, so we'll do. So here's our bullish scoring system. If the MACD is above the 0 line, that's 1 point. If the 8 EMA is above the 21 EMA, that's 1 point as well. If the 21 EMA is above the 50 SMA, another point. And then we'll throw in something basic like if price is above 21 EMA, it also equals 1 point. And you can add things, you can play around with it, but the idea is best case scenario using this example would be 4 points. We find a stock where MACD is above 0, the 8 EMA is above the 21 EMA, the 21 EMA is above the 50, and price is above that 21. There's your scoring system for a bullish trade. And now as you're going and looking at 3, 4, 5 different names, use that scoring system to narrow down your watch list. Even if the trade is based on a daily squeeze, go check out the monthly chart. You're going to have better success getting long a daily squeeze in a name that has a perfect monthly chart versus you're buying a daily squeeze in a monthly downtrend. So if we were to go to, I'm going to think of the first random stock that comes to mind. Tractor Supply Company. I had no idea why that one came to mind. But I'll throw on the free MACD. I'll throw on the 8 EMA. Now, my scoring system's a little bit more, call it complex than this, but I'm just trying to get you the idea. And then you can take this and do it with the free indicators. So MACD, you're going up there. And then we just need squeeze labels. There we go. We will make our 8 EMA blue. All right, so Tractor Supply. And if I'm going to buy this thing, I want this to be as close to a perfect score as possible. So let me get rid of the big 3 squeeze, make it a little bit easier. And again, there's our scoring system. If MACD is above 0, we're getting 1 point. If the 8 EMA is above the 21, we're getting another point. 21 above the 50, another point. Price above the 21, another point. So how many points here for old Tractor Supply? Momentum is below 0. So you're looking at those bars. So we do not get a point for that. Okay, what about the 21, the 8 above the 21 EMA? Okay, the 8's above the 21, so we do get 1 point for that. Now, what about the 21 above the 50? We are getting a point for that. And then price above that 21, we're also getting a point for that. So on that scoring system, we're looking at a 3 out of 4. Not too bad. How does, say, Google stack up to that? And like I said, there's a lot more you can add to your scoring system. But hopefully you're picking up what I'm putting down. All right, well, Google, we have momentum above 0. So there's 1 point. We have the 8 above the 21. There's another point. We have the 21 above the 50. There's another point. Price is above the 21. We're a perfect 4 out of 4. Guess which one I'm going to trade first? Google over Tractor Supply. Then you got a name like Eli Lilly. And if I run Eli Lilly through the scoring system, I'm not even thinking about buying that. Momentum above 0? No. 21 above the 50? No. 8 above that 21? No. Is price above the 21? I mean, barely. Just in that little scoring system, I can say, all right, I shouldn't pay any attention to Lilly, and I should really narrow down my focus to Google. And again, I'm doing that in what? I'm doing that in the context of a small watch list. Taking the same names I've historically made money on, approaching them with a squeeze first focus, but then I only want to trade the best of the bunch. So if I had to buy one today, all right, weekly charts are all pretty good. Monthly charts are all pretty good. Microsoft really sticks out. Gets a positive score on every time frame. Probably going to go with that one. So that is my advice, my friends. And again, a lot of that just circles back to focus. Getting a clearer sense of what your job as a trader is, and then just honing in on that. So try to do those two things this weekend. Print out all your trade results. Go back as far in time as you can. First, try to get a sense of which names do you historically make the most on. And you might see a theme. You might not see a theme. But I think start with a stock first focus and then dig a little bit deeper in terms of a setup focus. So you might find that every year you make the most money on retail stocks. Like for whatever reason, you're just in sync with the retail stocks. Figure out that critical piece of information and then get a bit more detailed. All right, I'm kicking ass in the retail stocks. What am I doing setup wise? What's really working in those retail stocks? What's the setup? What's the signal? All right, figure that out. Shift your focus to that and nothing but that. Go to setups in a small focused watch list and then incorporate a scoring system. And I think that'll eliminate a lot of the noise and try to keep yourself focused on the things that work well. One thing I've suffered from, I think a lot of us continue to suffer from, call it shiny object syndrome. All right, I know the names I make money on. I know the setups I make money on. I know the signals I make money on. But I'm going to venture off here and see what's going on in this group. Or I'm going to get distracted and venture off to that strategy or that setup. It's a commitment thing, really. I think whether you're 3 years in, 5 years in, 10 years in, at some point you kind of got to make that commitment. I'm not going to be great at everything. Right? I'm not going to be great at day trading and buy and hold and swing trading and scalping. I'm not going to be great at trading with 10 different sets of indicators. I'm not going to be great at trading hundreds of different stocks and different setups. But what I can do is find what works, eliminate everything else, and then get really good at that one thing. So stocks, setup, and then build out your scoring system. And for you guys and gals in here, if you do build out your scoring system, feel free to share that with me or share it in the chat. Might be a few things I can pick up from you. But with all that being said, kind of a smooth transition here into scoring systems and squeezes and things of that nature. Check out these apples. Got the indices here. The monthly charts all grayed out really, really well. The weakest is IWM with a positive 7. All of the weekly charts, 1 point away from a perfect score. The daily chart, 1 point away from a perfect score. The 15-minute getting tossed around, the hourly getting tossed around, I don't think that much of a big deal. If anything, a day like today is a day you're trying to buy a little bit more. In the context of a really good weekly chart, in the context of a really good monthly chart, in the context of a really good daily chart, I'm getting a little bit of a dip. Not a bad spot to pick it up. But then notice over here in the M column, the squeeze column, we have a monthly squeeze in the RSP, the Dow Jones, the IWM, and the SPX. So I want to take you through the time machine here real quick. And it's one of those things where does history always repeat itself? No. Does history oftentimes rhyme? It does. It does. So I'm going to take you back to 1980, and I'm going to show you. Let me change this up real quick. But I want to show you all the monthly squeeze buy signals since 1980. So simple trading, big three squeeze. All right, bump that up a bit. All right, squeeze. And I'll blow it up so it's a little easier to see. But pretty straightforward. When that combo comes together, the combo being a squeeze and a big three buy signal, my full expectation is we're going to push into the green line. So in the current monthly squeeze, the green line's up there at 5,100. And what that's measuring is 3 average true range moves above that 21 EMA. And that's kind of universal across all time frames. You find that combo on a 15-minute time frame, a 30-minute, a 4-hour, a 2-hour. When the squeeze fires, you should catch a push towards that green line. So if we go all the way back here to 1980, yeah, I'll do it like this. And like I was telling all of you in the mastery group earlier, my preference is talk about these things before they happen, with the understanding they might never happen. But I'll take you through here real quick. So 1980, big monthly squeeze signal. SPX goes from 100 to about $1.40. Nothing to sneeze at. 1985, monthly squeeze buy signal, squeeze triggers. We're going from $1.60 to 300. Now, for what it's worth, I'm not here to claim the market is going to double. So I'm not trying to preach any craziness like that. $19.91, nice push. You had a 1 squeeze in 1993. Again, nice push. You had your next monthly squeeze signals in 1995. Not too shabby. Since 1980, this is the only time that signal's printed, and we have not gotten big time follow through. It printed, the buy signal disappeared, and down we went. So that is one potential outcome as far as where we're currently trading. We've got the squeeze, we've got the buy signal. Who knows? Maybe by next week, maybe by the following week, it's gone. But as long as it prints, I'm going to look at what happens 95% of the time, which is this. We've built up a crap load of energy. Momentum is bullish. Structure is bullish. The moving averages are stacked bullishly. The scoring system is through the roof. You look for a big push. So there's 2005 through 2007. You had a good one back here in 2013, 2016. We had one before COVID. We had one after COVID. And now here we are again. So again, I have to treat that like any other time frame. I got to look at that like that squeeze signal on a 5-minute, a 15-minute, a quarterly chart, an hourly chart. Until that green arrow disappears, should be heading towards that green line. So the biggest thing that I'm seeing heading into 2024, and don't get me wrong, the daily charts are overbought. So I do think we're due for a pullback, and I would love a pullback. The weekly charts are overbought. There's even some monthly charts that are a little extended. But if you kind of take a step back and take the 40,000 foot view, when I look at monthly charts of the S&Ps, the Dow, the IWM, the RSP, individual stocks like Google, Amazon, the biggest theme that I'm seeing is the party is just getting started. And in some cases, the party hasn't started. I mean, really, for the SPX, the party doesn't start until the squeeze fires. So a little bit of food for thought there. Be very careful fighting that. Take Amazon, for example. I know the daily chart's a little overbought. I know the weekly chart's overbought. Do I think we're due for a decent dip? I do. But man, do I think this thing's gearing up for a big 2024. Monthly squeeze just fired. You just got a monthly buy signal. What that implies is for the first time in 2 years, Amazon's monthly chart is in a position to trend higher. So take that rally from, late October up until recently. That's pretty much what that rally did for the market. For the first time in 2 years, it positioned the monthly chart in a fashion where we can actually trend higher. I'll show you here on the QQQ. It's been 2 years since the momentum, the structure, everything's been aligned here for the QQQ to trend higher, on the monthly chart. Kind of tough for me to think that the party's over anytime soon. So there's a few things I'm seeing heading into 2024. But yeah, just to reiterate the advice here, make 2024 a year of focus. Focusing on trying to push your edges. Right, the stocks are going to trade, the setups and the signals are going to trade. And then I think, again, a good weekend project is develop a scoring system. What are your momentum tools? Are you using the MACD? Are you using slow stochastic? Are you using the 10x bars? Take your momentum tools, take your structure tools. Are you using stacked DMAs? Are you looking at the moving averages? Take all the things you look at through your own indicators. Build out that scoring system. You can make it 5 points. You could make it, really as many points as you want. The goal being, if I'm getting long the highest quality stock from top to bottom. And if I'm getting short the weakest stock from top to bottom. So if y'all have any questions on that, any tickers you want to take a look at, feel free to throw it at me here in the chat. Otherwise, that is a wrap for me on the mic this year. Third year at Simpler in the books. It has been a pleasure. It has been a pleasure. Lorna, anybody coming up after me? I don't want to step on any pause. Okay, cool. All right, couple questions here. What's up, John? Okay, how do I take my trade entry? Yeah, that's the ideal entry. So like a name that I really like right now is Google. And on the weekly chart, Google's what I would call an A plus setup. I've got my squeeze, I got my buy signal, I got all the criteria to want to enter a trade. But most importantly, and the entry would have been a little bit better last week. So last week would have been perfect. Got the squeeze, got the buy signal. I want to pick that up right near that 21 EMA. If you look at, say, Amazon as a comparison, I pretty much missed the bus here on Amazon. It had a weekly squeeze. It was setting up near the 21, and off she goes. So I think, regardless of the time frame of focus, you want to take your entries right on top of that 21 EMA. And what that does is it allows you to work a good risk reward if you can just manage your entries appropriately. We'll take Tesla as an example. We'll kind of tie it together here with Tesla. All right, so what is my signal? The green arrow down there. Squeeze and an active buy signal. What is my game plan? As long as that signal's printing, I think price heads towards 300, 307. So it's my go-to setup. It's my best setup. And now the goal should be I want to trade my best setup with the best risk reward possible. That's where I think that 21 EMA is the anchor is really, really helpful. I'm going to work my best risk reward, trying to play for a push towards 300. The closer to that 21 EMA, I can buy it. If I buy it at 280, I've maybe got $20 of upside, and I might take $40 on the chin all the way back down to that 21 EMA. I don't like that entry. If I buy Tesla today, I'm going to risk maybe $10 on a move under the weekly 21 in exchange for about $50 to $60. And that's the whole key, right? The better we can get at locking in entries like that, the less and less we have to obsess with our win rate. Like frankly, I'm kind of over the whole win rate thing. If I see a trader on Twitter or YouTube talking about an 80, 90% win rate, my first thought is, ugh. That sounds good on paper, but what happens at 10% of the time that you're wrong? So we could do a trade on Tesla every week. That's got about a 95% chance of success. But man, the one time that thing goes wrong, it's going to get ugly. If I can buy it here, take my trade off for a loss somewhere down here, in exchange for a chance to take my profits up here, think of how profitable I can be with even a 50% win rate. If I'm wrong just as much as I'm right, but I'm working that kind of risk reward, put it in terms of the equity. I'm going to buy it at 250. I might take it off at 238, but my target is 305, 310. Now translate that to the options trading, whether we're selling credit spreads, we're buying calls, whatever the case may be. If my risk on the equity is $10 and my profit potential on the equity is a $50, $60 move, I can go for that 10 times in a row, only be right twice, and probably still walk away with a nice profit, an overall net profit. If I'm buying things like Amazon, where the squeeze already fired, price is already pulled away from that 21 EMA. It doesn't mean I can't make money. It doesn't mean Amazon can't go higher. It just means I'm going to have to crank out a much better win rate. There's maybe another few bucks in the tank. And there's also about $12 between the current price and that 21. So really good question. Develop your scoring system. I am obviously a huge fan of incorporating the squeeze. And then try to lock in those entries where you don't need every trade to work. And I think that comes down to the relationship between the current price, the 21 EMA, and then your profit target. Yeah, Lorna. Yeah. Yeah. That's my favorite. It's like I got an 85% win rate. On my winning trades, I catch 2 points. On my losing, I lose 10. Peter, really good question. Have I had the most success with singles, verticals, or flies in my daily squeezes? I think that depends on how we want to define success. There's those different variables. The win rate, the percentage return on the trade. So my highest win rate trading came from trading daily and weekly squeezes with deep out the money credit spreads, which frankly I'm no longer a big fan of. But I would find something like Tesla. Okay, I found a weekly squeeze. My indicator says good chance for going higher. Now I'm going to sell options, way in the opposite direction and try to collect that premium. So what I was doing was I was trading my very best setup. If I'm being completely honest, in what felt like a safe fashion. Right? Again, a little bit of that obsession with the win rate. A little bit of fear of a losing trade. I would find a setup in Tesla that I had conviction could go to 300, and I'd be selling credit spreads, somewhere down here. Now, the nature of that, selling options in the opposite direction on a good squeeze, it leads to a good win rate. Excuse me, it leads to a good win rate. The exchange for that win rate, not a very good risk reward. Okay? For every $1,000 I make, I'm putting up $5,000 of risk. So I kind of look back and cringe on some of my better squeeze trades, knowing that I sold the credit spread. If I really got conviction Tesla's going to go up 50, 60 bucks, why am I placing a bet it's not going to go $40 lower? Well, I'm doing that because of the probability it's going to work in my favor. There's some sense of safety with a deep out the money credit spread. Then the reality sinks in. You don't get a big weekly squeeze on the buy signal or a big daily squeeze on the buy signal every week, every month. And for some names, you don't get them every year. That is my moment in time to shine and move the ball forward. So win rate wise, I had the most success selling deep out the money credit spreads. As far as actually growing my account and keeping the money that I make, it's either buying in the money calls, a Delta 70 call, or doing something like an out the money debit spread. It's really a matter of what kind of trade can I structure so that if this trade actually works, it's going to be meaningful. Risking 4 to make 1 on a credit spread, unless you're putting your entire account into the trade, it's not going to be all that meaningful. If I can go with an out the money call debit spread that can net me a 2, 3, 4x return if the trade works, hey, that's kind of meaningful. And if I can catch a few of those per year with decent size, right, nothing crazy, just decent size, that's going to be really meaningful. So that's where I'm at now. When that comes together, I have the conviction. And I'm going to express that conviction through the options trade. I had the best win rate with the credit spreads, but I also had the most, blow and go. Making money every week, making money every week, making money every week. The 1 week, if you don't work, you're taking way too many steps back. So going back to what I was saying earlier, I was putting myself in a position where I needed that good win rate. If I'm going to grow my account this year trading squeezes, I need a 70, 80% win rate because of my choice to sell the credit spread. Because when I'm right, I make 1. When I'm wrong, I lose 2 or 3 or 4. I want to lean towards the opposite. If I'm wrong, maybe I lose 1. But if I'm right, I'm making 2, 3, 4. And then if you can figure out how to do that with a high win rate, you will be on top of the world. But all right, folks, I'm gonna let you go here. I've got a haircut in about an hour. I got to get looking spiffy for my dinner date on New Year's Eve. Every year, my wife and I go to Capitol Grill at midnight, which is pretty big for me considering I go to bed at like 9. So I'm gonna get all dolled up for that. But hey, again, thank you for all your time and effort this year. Thank you for being a part of the rooms. If you're not a part of the rooms, thank you for following along on YouTube, Twitter. For those of y'all that follow my YouTube channel and stay in tune with me, I appreciate you as well. And I hope you found today's session helpful. So your weekend homework is print out your track record, figure out the stocks you tend to make the most money on. Once you figure that out, take it a step further. What are the setups and the signals I tend to make the most money on? From there, make that your overall focus, develop a scoring system, and I wish you all the best in 2024. Adios, y'all. Be safe this weekend.